Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski.
The widening US trade deficit and an increase in weekly US jobless claims have added further pressure on the dollar, which has been struggling recently. Today, the first half of the session will be packed with key data from the Eurozone. The focus will start with GDP figures for Germany and the Eurozone, followed by changes in German unemployment and the Eurozone unemployment rate, and will conclude with Germany's consumer price index. Weak data could put noticeable pressure on the euro, triggering a corrective move in EURUSD. In that scenario, the first signs of buying interest are expected near the new support level at 1.1897. A false breakout at this level would provide a potential entry point for long positions with an initial recovery to the target at 1.1948. A breakout and subsequent retest of the zone would confirm bullish intentions and open the way for a stronger push toward 1.1992, where active selling pressure is expected. The most distant target stands at 1.2037, where profits would be taken. If EURUSD moves lower and no buying activity emerges around 1.1897, the pair could extend its correction. In that case, bears may attempt to reach the next key level at 1.1852. Only a false breakout there would create a favorable condition for long positions. Aggressive buyers may also consider longs on a rebound from 1.1810, targeting a 30-35 pip intraday corrective move. Sellers remain active, but the market has not yet reached a turning point that would signal the end of the bullish trend. Most likely, trading will continue within a sideways range, meaning selling the euro is preferable near the upper boundaries of that range. The bear's primary task today is to defend the 1.1948 level. A false breakout in this area would provide an entry point for short positions, targeting a move toward 1.1897. A clear break and sustained move below the zone, followed by a pullback from below, would signal a breakout of the range and offer an additional opportunity to open short positions, with downside targets near 1.1852. The final downside target is the 1.1810, where profits would be taken. If EURUSD continues to move higher in line with the trend, and bears fail to show strong resistance around 1948, where a key moving average are currently located and favor sellers, the bullish market structure will remain intact. In that case, short positions are best postponed until the next major resistance at 1.1992, where selling should only be considered after a false breakout. More aggressive shorts are planned on the direct rebound from 1.2037, targeting a 30-35 pip corrective move to the downside.
And now it's time for GBPUSD. Let's discuss it with Paolo Greco.
The average volatility of the GBPUSD pair over the last 5 trading days is 128 pips, which is considered as high. Therefore, we expect the pair to move within the range limited by the levels of 1.3665 and 39.21 on Friday. The upper linear regression channel is directed upward, indicating a recovery of the trend. The CCI technical indicator has entered the overbought area for 6 times in recent months and has formed numerous bullish divergences, consistently warning traders of an impending resumption of the upward trend. The entrance into the overbought area indicates a correction. The GBPUSD pair is on the verge of resuming the 2025 upward trend, and its long-term prospects remain unchanged. Donald Trump's policies will continue to put pressure on the US economy, so we do not expect the US currency to grow in 2026. Thus, long positions with targets at 1.3916 and 39.21 remain relevant in the near term, while the price remains above the moving average line. It's a sign line on the graphic. If the price is below the moving average, small short positions can be considered with a target of 1.3550 on technical grounds. Occasionally, the American currency shows correction, but for trend growth, it needs global positive factors.
That's all for today. See you online soon.